Hey, did you get your mom's birthday present yet?
No, the credit card I have is only for Bob's Sporting Goods, so I don't really know what to get her.
Well, did you think about getting a Visa card?
I have, but I keep getting denied.
Building your credit can be really challenging sometimes, but here's a few tips to help you understand how to boost your credit.
Establishing and using credit responsibly is an important component of personal finance. Keep in mind, every time a financial institution lends money, there is a risk the borrower may not repay the loan. To help mitigate that risk, lenders consider key areas which are referred to as the 5 C's of credit. Character is your history of repaying debt. Capacity is your ability to repay debt. Capital is the amount you have available in an account. Capital helps determine if you have the money required for a down payment or reserve to pay the loan if needed. Collateral is an asset which can be used to secure a loan. For example, your car is collateral for an auto loan. Conditions are the term, rate, due date, and any other requirements associated with a loan. Let's take a closer look at some of these terms. Lenders will use your credit score to determine your character. Credit scores are calculated based on information found on the individual's credit report, generated by 3 major credit bureaus: Experian, Equifax, and TransUnion. Scores fall between 300 and 850. The higher your score, the more likely you will be approved for credit, receive better interest rates, and have to deal with less restrictions. Let's take a look at a guide to how lenders view your credit score. A score under 580 is considered poor and viewed as a substantial credit risk. A score between 580 and 669 is considered to be fair. You may be approved for a loan at a higher interest rate with more restrictions. A score between 670 and 739 is good. You will typically be approved with better rates and less restrictions. Scores of 740 and above are very good, and lenders will offer you their best interest rates. There are real-life impacts to having a higher credit score. Let's take a look at one such example. Kayla and Frank both applied for a $20,000 car loan for 60 months. As you can see, Kayla's credit score is 60 points higher than Frank's. Kayla is offered a much better interest rate with a lower monthly payment. At the end of the loan, Frank would have paid an additional $1,370 in interest just because he had a lower credit score. There are many factors which make up your credit score. 35% of your score is determined by past payment history. Late payments will have the biggest negative impact on your score. 30% of your score is based on the amounts owed. The more extended you are with credit, the more you are a potential risk to other lenders. 15% is based on the length of your credit history. The longer you've used credit responsibly, the higher your score. 10% is based on new credit, which may be a sign that you are starting to overextend yourself. The final 10% is based on a credit mix between credit cards, auto loans, and rent. It takes time to build and boost your credit. Follow these tips to start you on your way. Pay on time. On-time payments show dependability and will start boosting your score. Utilize credit. The best way to demonstrate you can pay on time is by using credit. Consider paying monthly bills, such as cell phone, cable, or gym membership, with your credit card, and then pay the balance off at the end of each month. Keep spending in check. While utilizing credit is important, don't get in over your head. Approximately 30% of your credit score is based on a ratio of outstanding debt compared to total debt available to use. A good ratio is 30%. This means if your total limit of your credit cards combined is $10,000, you want to make sure that your balance is less than $3,000. Respect your obligations. Not happy with your cell phone service? Best to leave on good terms. Disregarding that last bill will result in the company reporting you to a collections agency. That's going to do big damage to your credit. Failing to pay utility payments, medical bills, and even parking tickets will all likely result in a collections hit on your credit. Consider a secured loan. Individuals looking to build or repair their credit may want to consider a secured credit card. With this loan, the amount of your credit line is secured in a savings account as collateral. Since the risk to the lender is low, it is much easier to get approved and to start building credit with on-time payments. And finally, check for errors. Occasionally, something which appears on your credit report doesn't belong to you, or information may be inaccurately reported. You should check your credit report on a regular basis to make sure everything is correct. Embark on your financial journey with Horizon. For more information, visit us at our website, www.horizonfcu.org/embark.